Hello, I'm Terry Badger, Managing Editor at BAI and host of the BAI Banking Strategies podcast. Welcome to BAI's deep dive into the top business challenges that financial institutions expect in 2022. My guest for this piece of our coverage is Patrick Smith, who heads up small business banking at Santander Bank. One of the key challenges cited by banking institutions responding to a recent BAI Banking Outlook survey is growing their loan books, including in the area of small business banking. So Patrick, we appreciate you joining us on this BAI deep dive into top business challenges.
Thank you, Terry, for having me. It's great to be here.
So Patrick, could you start by reminding us what a small business is to Santander from a dollar standpoint so that we're all clear on the market that we're going to be talking about?
Sure. We like to focus on the revenue size of the business. So that's how much annual revenue the small business itself produces. And so for us, that's anything from startup up to $3 million. Now there's a little bit of ambiguity once you get to, slightly above that, but for the most part, that's where we like to focus our efforts.
Okay, so now that we have the size established, what do you think small businesses are looking for from their financial institution in terms of products and services, and also in terms of the experience?
Yeah, so I think there are a few things. One is I think there are the two kind of cornerstone evergreen concerns for small businesses, which is cash flow management and access to capital. And so those haven't changed. I think those are still foremost and at the front of the minds of small businesses. There's some new, I think, either pandemic concerns or recent economic concerns or things that have been highlighted by either of those two trends. So one is clearly supply chain management and inventory management. So making sure that there is sufficient inventory and stock on hand. I think digital, and I think small businesses have accelerated their progress toward digital engagement with their financial institutions as a result of the pandemic. And we see that as a continuing trend. And then there are some things around the recent macroeconomic trends, particularly around being able to attract and retain quality employees. And then additionally, I think what they're looking for is, and we hear this all the time from our clients, is really advice and guidance. And they want advice and guidance delivered with a degree of empathy and concern. They are looking for digital tools to make sure that they can be efficient and effective and continuing some of the things that they shifted to in the pandemic. And then I think finally, and I think this is maybe the foremost attribute, is they're really looking for trust. They want trust in the relationship, and I think that's been highlighted by the pandemic. Is that when you have a need, an urgent need, it's really nice if you can turn to someone that you trust. And so increasingly, we see trust being elevated as part of the equation for our small business clients.
The small business banking space, it's an area that hasn't historically gotten as much attention from banks as other parts of lending. But it seems to have come into fashion lately as fintechs and other competitors are coming into the market. In this increasingly competitive space, Patrick, what do you see as Santander's competitive edge?
I think there's a couple of things. One is that, we feel like we kind of operate in this Goldilocks space in terms of our size and capability set. So we're large enough to be able to invest in all of the things that small businesses want from a product perspective, a servicing perspective, new digital tools, et cetera. But we're small enough where we can essentially operate as a trusted advisor in our communities, working closely with our small businesses. And so we think the combination of those two things, which is higher touch combined with our relative scale and ability to invest in some of the more advanced capabilities that will help small businesses manage their businesses better, creates a competitive advantage for us. The other thing is that we have the ability to leverage some of the things in our global franchise and footprint. I was on the call yesterday with our colleagues in Mexico. They're doing some things around cards and payments, some digital experiences that we can learn from and leverage here in the U.S. And so there are lots of those sort of global capabilities that we can bring to bear on behalf of our clients in the U.S.
It's still pretty early in 2022, but what do you expect to be the key drivers for small business loan demand this year? And what are you seeing to support that outlook?
Yeah, so I can tell you already, we're seeing an uptick. It's early in the year, of course, but we're seeing an uptick in loan demand compared to the last couple of years or so. So, year over year, we are seeing strong demand, and we think that's going to continue to trend upward as we get deeper into the year. But But really, I think there are a few underlying drivers. One is just reopening. I think clearly there is an appetite on the part of the government at the state, local, federal level to drive more reopening as we get into spring. And small businesses, I think, are really looking forward to being a part of that, that reopening. And actually, that's going to be boding well for their businesses. As I mentioned earlier, I think in an environment where small businesses got burned by supply chain issues and there's a rising inflation, I think the appetite to carry more inventory, if that's part of your business model, is I think there in a way that it hadn't been in the past. And so I think that's another driver. So the need to finance that additional inventory cost. And then being able to manage some of the things that have really been born out of inflation, specifically around wage inflation and some of the other input costs that are going up for our small business clients. All of those things create needs for more working capital, and part of that's going to be addressed through more lending.
Santander recently announced that it's getting out of the U.S. mortgage business, which surprised some people, given that mortgage is really a bread and butter business line for banks. What is the thinking in getting out of mortgage, and does this signal that there is a fundamental change in U.S. strategy at Santander?
Well, no. This is a clear attempt on our part to sharpen our focus on what we do in our business and our franchise here in the U.S. And we took a real objective, clinical look at our business, and it's clear to us that for home lending we were subscale and structurally disadvantaged. So it just wasn't the kind of place that we're going to be able to earn the type of return on investments that we're looking for. And so it just didn't make sense. So it was a tough decision because it had an impact on some of our colleagues, and that's something we take very seriously. But the business aspect of this, I think, was really clear. It just wasn't a place where we were going to be able to compete in the way that we wanted to. And so what this does is that it allows us to really focus our resources, our assets, our capital in places that really comport with the things that we do well, places where we have advantages and established or emerging capabilities, and places where we can over time achieve the types of returns we're looking to achieve. And so it's really an opportunity for us to really sharpen the focus of our U.S. business on places where we can be successful.
Does this decision on mortgage, does it have any impact on your main business line? And by that, I mean small business lending in terms of, say, putting more emphasis on the small business market and or making more capital available?
Yeah, so it's going to have a gratuitous effect on small business in that we are looking to be a premier small business bank in the U.S. And so this will allow us to allocate more resources to our small business segments. And so all the things you were alluding to earlier, sort of better products, better servicing, more investment in things like digital, more sort of advice and guidance, all of those things that small businesses are demanding. This gives us an opportunity to allocate more investment toward those needs.
Sort of a conventional wisdom in banking, Patrick, is that small businesses, and particularly the small dollar end of the small business continuum, that they're typically hesitant or even unwilling to pay for services. That oftentimes entrepreneurs still think of themselves as a retail customer focused on free banking services instead of as a business customer. So how much are you running into that? And when you do run into that, how do you persuade those small business owners that some services are actually worth paying for?
Yeah, we don't run into that candidly a lot. I think what we see is small businesses clearly have a need to manage their costs. In fact, that's uniformly true of all businesses of any size. And so, that is always, I think, a framework. I think clearly for smaller businesses, it's even more of a need because they're operating on pretty thin margins and low cash flow cushions. And so they really have to be thoughtful and vigilant about managing their costs. That said, we see that small businesses are willing to pay for value. And so in places where we can demonstrate that we're offering clear and compelling value, small businesses are willing to pay a reasonable and fair price for those.
So where are you on PPP? Is it still out there for you in some form, perhaps weighing to some degree on loan growth if small businesses have a lot of capital on hand as a result of the stimulus programs and the rescue programs from the federal government?
So first of all, let me say how proud I am of our efforts in PPP, particularly this last round in 2021. We were able to serve a lot of our clients who, either net new didn't get a PPP loan in the first couple rounds, or were coming back for a second draw. And so we feel incredibly proud of that. And I know that from the feedback from our customers, for many of them, that was a lifeline that helped to sustain them during the pandemic. And so we feel fantastic about that. We're still involved in PPP. It's still out there in the form of forgiveness. And so, we are ahead of the industry and getting our clients through the forgiveness process, again, which we also feel good about because just the psychological comfort of having that loan converted to effectively a grant, I think is good for our clients, and it helps them to turn the corner and to focus forward on what they're going to do with their business going forward. And in terms of your core question, the business impact we see is that there still is a certain amount of surplus liquidity in the marketplace. Now, that said, we do see spending picking up for both consumers and for small businesses. So as that spending starts to pick up, those balances, excess balances start to draw down. And the other thing we're starting to see as reopening starts to occur more broadly is that as dormant businesses, dormant physical locations start to reopen, inventory needs to be built, employees need to be brought back on. All of those things create, more of a need for both net new lending as well as greater line utilization for pre-existing lines of credit that we have outstanding with clients.
Are there ways that the pandemic and the response to the pandemic for small businesses, and by that I'm guessing PPP primarily, are there ways that this has reshaped or is reshaping the way things are done in small business lending that will likely still be around long after the PPP program itself is in the rearview?
Yeah, so for us, this has been it's been in some ways a revelation in terms of what we do with small businesses. We'd already started to make some changes and modifications to focusing on small business. You asked me about the size of the segment. That's something that we shifted to, a year and a half or so ago. And so we started to make some changes that we accelerated during the pandemic. And it really does help us to focus more on small businesses as a distinct cohort and segment. And so that will retain. I think our focus on small business, it helped us to become, candidly more agile. So the amount of sort of core business agility that we demonstrated during PPP, that's going to carry over into our BAU. We don't want to lose that instinct to be quick and responsive and serving our clients. Some of the assets that we built, some of the digital servicing capabilities that we launched, some of the payment capabilities, the application, the ability to accept applications remotely and digitally, all of those things will be part of our go forward business mix. And then I think lastly, the trust and the goodwill that we built up over the course of the last couple of years in serving our clients when they really needed us. I think that provides us a natural opportunity to enhance our relationship deepening going forward.
So Patrick, I don't think this conversation would be quite complete without thinking about and talking about interest rates. Goldman Sachs envisions as many as 7 rate bumps by the Fed in 2022. The consensus seems to be closer to maybe 5 rate increases. I'm not going to ask you your view on the Fed dot plot or anything like that, but I am wondering how you're thinking about the rising rate environment and its potential impacts on small business loan demand.
Yeah, so I think there's really I think there's a set of kind of tailwind factors, and there's a countervailing set of headwind factors. On the headwind side, as you mentioned, the increases or expected increases in rates will clearly, I think, sort of factor in to decisions around small business decisions around being able to access credit. And also, clearly there's a lot of right now geopolitical risk, which are leading to economic uncertainty. And so both those things, I think, present certain headwinds that are clear considerations for businesses of any size, small businesses included. But we think that the countervailing set of tailwinds will be more than enough to offset that and then drive loan growth. Specifically, we see consumers are spending again, and that's really sort of the core sort of driver of small business activity and then loan demand at the end of the day. The reopening and recovery, we talked about that earlier. That's going to be essentially a big driver. Inventory and inflation, the need to be able to sort of manage those things will be part of the drivers of the need for more working capital for small businesses. Small business confidence is way up. I mean, small businesses are pretty optimistic about 2022. You saw the rate of new business formation. It was at an all-time high last year. That's a positive sign. Credit policies, I would say, the last thing, are starting to normalize. And so all those things, I think the confluence of those factors, I think will conspire to more than compensate for the increased credit costs and to drive net loan growth in the course of 2022.
Yeah, as long as the Fed can walk that line between, trying to put a bit of a cap on inflation without cutting the legs out from under the economy, sounds like that's the scenario that you're talking about. So Patrick Smith, head of small business lending at Santander Bank, thanks again for making the time to join us and to share your insights as part of BAI's deep dive into the top business challenges facing financial institutions in 2022.
Thank you, Terry, for having me. I appreciate it. Good to be here.
And for those of you watching, we hope you found this conversation with Patrick to be time well spent. Thank you again for being with us, and enjoy the rest of your day.